C3.ai has dropped from a high of $45 a share all the way down to $15. That's more than a 60% collapse during the biggest AI boom that we've ever seen. So the question is, does the stock finally rebound, or is it going to continue sinking? Well, this company isn't some random startup. It was built by the same guy who sold Siebel Systems to Oracle for $5.8 billion. Not a bad payday, eh? And today, they're selling more than 130 enterprise-grade AI applications to giants like Shell, Koch Industries, and even the Air Force. But there's one thing about C3.ai that I don't hear anyone talking about. It's something that's buried under the headlines that I think could flip the stock from a falling knife to a surprise turnaround. And that's why in this video, you're going to learn why the stock has cratered, what Wall Street, I think, is missing, and the single signal that I'm watching that could tell us whether C3.ai or the stock is finally at the bottom or if it's going to continue dropping. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. So with all that out of the way, let's get into it. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. So to understand what C3.ai is, let's start with its history, because understanding where it came from helps us explain where it is today. And once you see your evolution, the stock behavior becomes a lot easier to understand. C3.ai was founded in 2009 by Thomas Siebel as C3 Energy. Now, if the name Thomas Siebel rings a bell, well, it should. He founded Siebel Systems, which Oracle bought for $5.8 billion. So he's not new to building and selling major software companies. The company itself has gone through multiple evolutions. When it started, the 3 in C3 stood for carbon, and the 3 stood for 3 M's: measure, mitigate, and monetize. I don't really know why they didn't call it C3Ms. Maybe it was just hard to pronounce, but it does show their early focus, and that's solving massive enterprise problems. Originally, the company helped enterprises measure and control their carbon footprints, but as markets changed, so did they. In 2016, they rebranded from C3 Energy to C3 IoT, and this was to ride the wave of the Internet of Things adoption. Then in 2019, they pivoted again, this time to artificial intelligence, and became C3.ai. And given their history, don't be shocked if they rebrand again when the next big trend hits. C3.ai went public on December 9th, 2020, right in the middle of the tech IPO boom, with the perfect ticker symbol, AI. So what exactly did they do today? Well, they make an operating system for enterprise AI. Companies need this so they don't have to build or custom build everything from scratch. Think of it as a foundation that other companies can use to plug their data into. C3.ai provides both the underlying platform and all the pre-built applications that help enterprises implement AI across their operations. Right now, they offer over 130 turnkey AI applications, everything from predictive maintenance to fraud detection to supply chain optimization. And their target customers are the large enterprises and government agencies. Some of the big names include Shell, the U.S. Air Force, Koch Industries, and Baker Hughes. And these organizations use C3 software to solve complex problems that are extremely difficult, hence the word complex, and sometimes impossible to tackle without the use of AI. And big customers usually mean big multi-year contracts, if the company executes, of course. Now that I've covered what they are and what they do, let's talk about the stock, because this is where things kind of start to get interesting, and it's probably why you're here. The last time I covered C3.ai, it was trading at around $17.50 a share. Now it's around $14, down around 20% since late September. Over the last 52 weeks, though, the stock has traded between $13.66 and $45.08 a share. That range shows us just how volatile the stock has been. It also shows us that investors still don't know how to correctly value the company. Year to date, the stock is down 59%, and over the last year, it's down around 48%. And all this while other AI-related stocks have been hitting their all-time highs during this boom. Yet C3, they've lost more than half its value since January. So why is this company sinking while the rest are exploding? Well, here's where the problems start. First, the first quarter guidance miss. This is a big one. Management themselves called the results unacceptable. They expected between $100 and $109 million in revenue. They delivered just over $70 million. That is a massive 30% gap between expectations and reality. It's a kind of miss that terrifies investors. A growth company like this missing 30% on its own guidance is kind of like a pilot missing a runway by a mile. When a company misses guidance this badly, especially one that isn't profitable yet, well, investors immediately lose confidence, just as they did. And right now, C3 trades on headlines more than fundamentals. So a miss of this size hits the stock really hard. And then there's the litigation overhang. C3.ai is facing a class action lawsuit that alleges that the company misled investors about their CEO's health issues and the impact on deal closures. The lawsuit claims that management knew that the CEO's health was affecting the business, but didn't properly disclose it. And class action lawsuits, win or lose, they're expensive. They often lead to settlements that cost tens of millions of dollars, plus the legal fees. And investors, they hate uncertainty, especially when it involves the leadership. Finally, there's a broader concern that we might be in an AI bubble. MIT's Project Nanda found that 95% of AI companies were generating zero return. And in a lot of ways, it's very similar to the dot-com bubble. Remember, a lot of AI startups aren't delivering any real value yet, and that fear is spreading across the entire sector. But it doesn't mean that all AI stocks are facing a 60% drop. I mean, during the dot-com bubble, the companies that fared the worst were the ones that weren't making any money. They weren't making any net income. Now, if we compared C3 with another company like Palantir, who actually does make money, they make net income. Actually, they recently posted very strong earnings. They beat estimates across the board, and the stock still fell, but this one only fell 6%. That's quite a difference. So with all these risks, is C3.ai stock still a buy? Well, consider that a consensus among 15 Wall Street analysts rate the stock a hold. The score is 2.73 out of 5, and it's been consistent over the last 3 months. The highest price target on the share is $40 a share, and that suggests as much as 185% upside from today's price. And that kind of upside keeps the speculative investors watching closely. I actually agree with the analysts. Given today's market environment and the company's struggle to at least increase their income, let alone profitability, I don't see the upside. I mean, there's a massive potential if the turnaround works, but for now, I'm going to be waiting on the sidelines to see if and when that happens. But let me tell you, when this stock moves, if it happens, when the stock moves is going to move fast. So it's definitely worth keeping an eye on. But before I run, do you believe in what C3.ai is doing? Let me know in the comments below. And while you're there, don't forget to like and subscribe because it'll help others find the video, it'll support the channel, and you won't miss out on any of my future deep dives. Well, folks, that's it for me today. I want to thank you so much for watching, and I'll see you next time.